Hi, let's talk today about budgeting. Budgeting for ACCA exam for management accounting. Budget let us more than just to communicate the activity of the organization. The budget coordinates the plan and control the performance. The preparation of the budget, as we know, is the duty of the budget committee. Let's see if we can point the objective of a budgetary planning and control systems. So we can say that we start with planning, and in order to plan how many workers the company need to produce a standard output for the next year, or we need to know the budget for how many pieces or kilos of raw material they need in order to produce the standard output. Planning is the most important step and the first one. Next we have controlling, because after first month of actual outputs, we need to compare for monthly budget the actual with the budget. Third is the coordination, because we need to coordinate the planned production process with the planned sales. And in order to integrate the efforts of all the units of the company, it all needs to be coordinated. Not to forget about communicating, authorizing the budget, because decision making to authorize what is in the budget, the number of people to hire in order to make the production in the budget. Of course, we have to talk about the performance and the evaluation of the manager performance. Each budget manager, sales manager, divisional manager, or even human resources manager, and not forget about the production manager for complying with standard production budget. The last one is motivating, and this is strictly related to the evaluation of the manager, motivating for responsibility. And here is a lot more to talk about. One more point: if there are no production resources limitation in the budget, sales would be the principal budget factor, and the sales budget would be prepared first, even before the production budget. And for the exam, please note that the budgeted inventory changes included in the finished good inventory budget then indicate the required production for the production budget. This would lead to the calculation of the material usage, which would be adjusted for the budgeted change in material inventory in order to determine the required level of budgeted material purchases. And one more tip: the material purchases would be information derived from the production budget after adjusting for material inventory changes, and the standard direct labor cost per unit would be required for the production cost budget, but not for the production budget, which is expressed, of course, in volume terms. In the next videos, we'll talk about the preparation of the master budget, fixed budget, and why we really need to prepare and compare a fixed budget and a flex budget as well.